Have you ever just, stopped for a second? Maybe you looked at the cash in your wallet or the balance on your phone app and really thought about it. Like, what is this stuff we call money?
Yeah, not just what it does, but what it fundamentally is.
Exactly. How do we all agree that these bits of paper or metal or even just numbers on a screen have value? And maybe more importantly, where is it all heading now in the 21st century?
It's a huge question. And honestly, when you start digging, it gets pretty fascinating pretty fast.
It really does. And that's exactly what we're going to do today. We're diving deep. We're going to explore The Bullish Case for Bitcoin by Vijay Boyapati. And look, if you're thinking, oh, great, another dry finance talk, just hang on.
Right. This isn't your typical textbook stuff. The source, it's an audiobook summary, actually, and it does a great job weaving together, history, tech, economics.
Yeah, it builds this really compelling case for why Bitcoin might be more than just like digital gold, maybe the actual future of money.
That's the core thesis, yeah.
So our mission today is to unpack those arguments, go beyond the crazy price swings you see in the headlines, and really get into the core ideas.
And we've got these live examples from this Imagine 2025 scenario to help make it all feel a bit more real, more tangible for you.
Exactly. Should make it really interesting. Okay, so let's rewind. Way back, like before coins, before paper money, think about the absolute basics of trade.
Right, the barter system.
Yeah, imagine you're a farmer, you've got tons of wheat, but what you actually need is, I don't know, shoes.
And the shoemaker next door needs meat, not your wheat.
Precisely. That's the double coincidence of wants problem, right? It's super inefficient trying to find that perfect swap, and it must have been incredibly frustrating.
Yeah, just think of the time wasted. The hassle. It's easy to see why people started looking for a better way. This is really where Boyapati kicks things off.
He does. He traces how money wasn't just, like, invented by some king one day. It emerged naturally.
Organically, yeah. Out of necessity, people needed something easier than direct barter.
The transaction costs of barter were just too high. Finding someone who wanted exactly what you had, and had exactly what you wanted, almost impossible on a large scale.
So societies gradually, almost unconsciously, started settling on certain items, trusted mediums.
Right. Things that maybe weren't useful to everyone directly, but that everyone agreed had value and could be easily exchanged. That was the breakthrough. Proto-money.
Made everything smoother, faster, less complicated.
And this isn't just theory, is it? History is full of examples.
Oh, absolutely. For centuries, people used all sorts of things. Cowrie shells were huge in parts of Africa and Asia.
Yeah.
Durable, portable, kind of hard to counterfeit,
And those giant stone discs on Yap, the race stones, fascinating. Their value wasn't even about moving them, but just knowing who owned which one.
Yeah, a very early kind of public ledger, in a way. And then, of course, you get metals, gold, silver.
The classics. Because they're rare, divisible, they don't rust.
Exactly. They had the right properties. Durable, portable, divisible, uniform, scarce, and crucially, generally acceptable. People trusted them.
That trust is key. It built up over time, establishing patterns of exchange.
And it's amazing how those same fundamental needs, the need for efficient, trustworthy exchange, they still drive things today, just in new forms.
Which brings us to that 2025 example. Indian farmers using digital wallets.
Think about that. Farmers who traditionally dealt purely in cash are now using QR codes, mobile apps.
It's not just about tech for tech's sake, is it? It's solving old problems. Security, less cash lying around, speed instant payments for crops, liquidity.
Exactly. The underlying human need for better money hasn't changed. Even if the form factor goes from shells to bits on a screen, it's the same evolutionary process Boyapati described.
That's a great point. Understanding that history is crucial, isn't it?
Absolutely foundational, according to Boyapati. Because you need to understand what problems money solves to evaluate something new like Bitcoin.
The core functions.
Yeah.
Medium of exchange, unit of account, store of value.
Precisely. Those needs are ancient, millennia old. Whether it was a shell, a gold coin, or now potentially a digital token, each successful form of money had to fulfill those needs better than what came before.
So Bitcoin isn't just some random invention, in this view. It's potentially the next step.
That's the argument. It's positioned as a solution designed for our time, digital, global, interconnected.
So its growing acceptance isn't just hype.
Boyapati argues it's deeper than that. It taps into that fundamental human need for reliable value transfer and storage, especially in a world that's increasingly online and borderless.
Like the shift to digital wallets in India, it's part of this bigger search for better money. More robust, maybe more resistant to control.
Yeah, it connects the historical pattern to the present day. Bitcoin isn't an anomaly. It's potentially the continuation of this very long story of how we organize our economies.
Okay, that sets the stage really well, which leads us directly to Bitcoin itself. If it's not physical, not backed by gold, not issued by any government, where does the value come from? Right? This is the part that trips a lot of people up, myself included sometimes. Our whole lives, money meant, governments, central banks, maybe vaults full of gold somewhere.
That's the mental model we're used to, yeah.
But Bitcoin, it's none of that. It's just .code, a network. So yeah, the big question, is it just based on belief? Is it real?
Boyapati tackles this directly, and his answer is actually pretty straightforward but powerful.
Which is?
Two main things: scarcity and trust. Built-in, verifiable scarcity and the growing collective trust people place in the network and its rules.
Okay, let's unpack scarcity first, unlike dollars or rupees.
Which governments can print more of, basically whenever they want, right? Sometimes for good reasons, sometimes maybe not.
Bitcoin has a hard cap, 21 million, period.
And that limit is baked into the code. It's not a policy decision. It's a mathematical certainty that anyone can check. That makes it fundamentally different. Its scarcity is predictable, unchangeable.
Okay, scarcity makes sense. What about the trust part? If there's no government guaranteeing it?
The trust comes from the network itself. Its transparency, its rules, the fact that the ledger, the blockchain is public and can't be changed. As more people use it, understand it, rely on it.
The network effect.
Exactly. The network gets stronger, more liquid, more useful, and therefore more trustworthy and valuable. It's trust in the code, in the mathematics, and in the shared belief of the users, rather than trust in a central authority.
That's a very different model of trust compared to, say, the US dollar.
Completely different. It flips the traditional model on its head.
Boyapati uses the gold comparison here, doesn't he, to make it more concrete?
He does, and it's a really effective analogy. Think about gold. What's its real use?
Jewelry, some electronics.
Yeah.
But mostly it just sits there, right, in vaults.
Exactly. Its monetary value vastly outweighs its industrial use. Why? Because for thousands of years, people came to trust it.
Because it's rare, it doesn't corrode.
And it was hard to fake, relatively speaking. People trusted it as a reliable way to store wealth, especially when things got unstable. Its value came from that shared trust and its natural scarcity, not because you could, build houses with it.
So Bitcoin is like digital gold.
That's the core of the analogy. It has that verifiable absolute scarcity secured by math and code, not geology. And the trust is built through the transparent, immutable protocol, a digital commodity.
And we're seeing this play out, people actually treating it like digital gold.
Well, look at that 2025 example again. Indian investors buying Bitcoin as an inflation hedge.
And not just the super rich or tech nerds anymore.
Right. Increasingly, it's the middle class. People who might normally buy physical gold or put money in fixed deposits.
Why a shift?
Because they're feeling inflation. The cost of food, fuel, school fees, it's going up faster than their savings are growing. Traditional options aren't keeping pace.
So they see Bitcoin's fixed supply
as a potential shield, a way to protect their purchasing power from being eroded by money printing. For them, it's not just speculation, it's becoming a defensive financial move. It's a practical response to the reality of currency debasement.
Wow. That's a powerful driver for adoption.
It really is. And this interaction between scarcity and trust, it's central to how assets gain value over time. Boyapati is tapping into some deep monetary history here.
So the collective belief in Bitcoin isn't just random. It's grounded in these verifiable properties.
That's the argument. Grounded in the fixed supply, the transparent ledger, the predictable rules. The fact that ordinary people in India are choosing it as an inflation hedge signals a real shift.
It's like a vote of no confidence in the old system.
In a way, yeah. Or at least a search for alternatives.
Yeah.
It suggests a growing demand for stores of value that politicians and central banks can't easily manipulate or devalue.
The global implications are potentially huge then.
Enormous. It positions Bitcoin not just as a tech curiosity, but as a potential answer to a fundamental problem in modern finance. How do you preserve wealth in an era of seemingly endless money creation? This link between the code's scarcity and real-world saving behavior is absolutely key to Boyapati's bullish case. It suggests people are rethinking what sound money even means.
Okay, so Bitcoin shares scarcity and trust with gold. But Boyapati argues it has advantages, right? What's this digital edge he talks about?
Yeah.
Gold's worked for centuries. It was the bedrock. So why do we need a digital version now? That's a fair question.
It is. And Boyapati doesn't dismiss gold's history, but he argues that the world has changed. Our economy is digital, global, instant gold. Well, it's physical.
And that physicality is its limitation now.
In many ways, yes. That's the core of the digital edge. Bitcoin's advantages stem from it being native to the internet.
Like what specifically?
Portability and transferability, mainly. Think about moving a serious amount of gold across borders.
Nightmare. Armored trucks, insurance, customs, huge delays, costs.
Exactly. Bitcoin. You can send millions, even billions of dollars worth anywhere in the world in minutes, sometimes seconds. Just need an internet connection.
That's a massive difference in ease of movement.
Huge. And it's secure in a different way. It's secured by cryptography on a public ledger, the blockchain. Every transaction is recorded, verified by the network, and can't be altered.
So unlike bank records, which are private, Bitcoin's ledger is open.
Completely transparent. Anyone can audit the supply, verify transactions. That builds trust through verifiable data, not by trusting a middleman like a bank or a vault custodian for gold. It's also censorship resistant.
Meaning no single entity can just block a transaction they don't like.
In theory, yes. That's a major part of the value proposition for many users.
And we've seen monetary systems change before, haven't we? Gold wasn't always dominant in practice.
Right. Think about the 20th century. Paper money, then electronic money, largely replaced gold for everyday transactions and even as the direct backing for currencies.
Why? Convenience, flexibility for governments.
Both. Physical gold is cumbersome for a fast-paced economy, and fiat currency gave governments more control over monetary policy. That shift sets a precedent.
So just as gold gave way to paper for convenience, maybe paper gives way to digital.
That's precisely Boyapati's line of argument. Bitcoin offers potentially even greater convenience, efficiency, and maybe, he argues, more integrity due to its fixed supply.
The remittance example from 2025 really brings this home, doesn't it?
It's a perfect illustration. Workers sending money home to India. Traditionally, that's slow, expensive, lots of fees, bad exchange rates.
Takes days sometimes.
Exactly. But now we're seeing them use Bitcoin. Why?
Because it's faster.
Cheaper. Dramatically faster minutes, usually.
Yeah.
Often much cheaper fees. And it works 247, holidays, weekends, doesn't matter. It bypasses the old banking infrastructure.
More money actually gets to the family. More control for the sender and receiver.
Precisely. It's a tangible, practical benefit driven entirely by Bitcoin's digital nature. It cuts out the middlemen who are extracting value.
So this digital edge isn't just theoretical. It has real-world impact for ordinary people.
Absolutely. It aligns perfectly with the needs of a globalized world. Cross-border payments, 247 markets. Bitcoin is built for that environment in a way gold or even traditional banking isn't.
It democratizes finance in a way.
That's a good way to put it. It lowers barriers, removes friction. Think about all the steps in a traditional international wire transfer. Multiple banks, correspondent banks, clearinghouses, all taking time and fees.
Bitcoin streamlines that.
Massively. It's a more direct peer-to-peer transfer on a global, always-on network. That efficiency makes it incredibly competitive, not just for individuals sending remittances, but potentially for businesses doing international trade, too.
That utility, driven by its digital nature, is a powerful force for adoption then.
Boyapati argues it's inevitable, really. It solves real problems better than the incumbents. That's how technologies win.
Okay, so Bitcoin has these digital advantages. But Boyapati also spends a lot of time critiquing the system Bitcoin aims to replace. Fiat money. Let's get into that. What are the core flaws he points out? All right, fiat money, the system we all live in. Dollars, euros, yen. Money backed only by government decree. It seems normal, but Boyapati really goes after it.
He does. His critique is pretty fundamental and, yeah, sometimes provocative.
What's the main issue he has with it?
Inflation. The unavoidable inherent risk of inflation.
Because governments can just print more.
Essentially, yes. Central banks can expand the money supply, often with the goal of stimulating the economy or funding government spending. But a direct consequence of increasing the supply of money is that the value of each unit tends to go down over time.
More money chasing the same amount of goods and services.
It means prices go up. Your savings buy less. Boyapati calls it a hidden tax. It silently erodes your purchasing power.
And he argues this isn't an accident, it's built into the system.
He sees it as an inherent feature of a system where the power to create money is centralized and discretionary. There's always a temptation to print more.
We've seen historical examples where this went badly wrong, right?
Oh, yeah. The 1970s is a classic example. The oil shocks were part of it, but many economists argue the high inflation was made much worse because countries had gone off the gold standard.
So central banks had more freedom to print money.
Exactly. Without the discipline of gold reserves, they could expand the money supply more easily to try and combat economic slowdowns or pay for things like the Vietnam War. The result: runaway inflation in many countries. Savings were devastated.
So it showed the vulnerability of fiat money when things get tough.
It exposed how susceptible the system is to political pressures and discretionary policy decisions that can lead to currency debasement. Boyapati uses these historical cases to show it's a recurring problem.
And it's not just history. That 2025 example, Indian families feeling the pinch of rising prices.
Right. That brings it into the present. People experiencing the rising cost of groceries, fuel, rent. They feel their purchasing power shrinking day by day.
And they connect that to the amount of money circulating.
Increasingly, yes. They see that their savings aren't keeping up, that the value of the currency itself seems to be declining. It makes Boyapati's critique of a system vulnerable to inflationary pressures very real, very tangible. It's not an abstract theory when you can't afford the basics.
So the core economic principle here is the danger of unlimited supply.
That's central to Boyapati's argument. Fiat money supply is elastic, controlled by human institutions susceptible to political influence and short-term thinking. Bitcoin, in contrast, has a fixed, predetermined, immutable supply.
Removing the human element, the political pressure.
Exactly. It proposes a monetary policy governed by code, not by committees. This mathematical certainty, he argues, is the fundamental solution to the inherent inflationary flaw in fiat systems.
Which leads to more individual control, financial autonomy.
That's the promise. If your money can't be arbitrarily devalued by money printing, your savings are more secure. You have more certainty, more control over your financial future. It forces you to question if the current system truly serves the average person's long-term interests.
You have radical rethinking of who controls money and how it should work.
It absolutely is. Boyapati presents Bitcoin not just as a technology, but as a fundamentally different, potentially more stable and equitable monetary philosophy.
Okay, so Bitcoin aims to solve these big problems with fiat. But getting everyone to actually use it, that's a whole different challenge.
Yeah.
How does Boyapati see that adoption happening? Is it like flipping a switch?
Yeah, that is the million-dollar question, or maybe the 21 million Bitcoin question, right? How does Bitcoin go from being this niche digital asset to potentially global money? It seems like a huge leap.
It does. And Boyapati acknowledges that. He doesn't predict an overnight revolution. His view is much more gradual, more organic.
He uses the internet analogy, doesn't he?
He does, and it's quite effective. Think back to the internet in the, say, mid-90s. Dial-up noises, clunky websites.
Exactly. It had huge potential. Everyone sort of sensed it, but it wasn't everywhere instantly. Adoption took time. It needed faster connections, better websites, more people getting online.
So it was a gradual buildup.
Right. Boyapati argues Bitcoin is similar. Widespread acceptance isn't a single event. It's a process driven by more people using it, finding it useful, trusting it.
The network effect again?
Precisely. Each new user, each business accepting it, makes the network stronger, more liquid, more valuable for everyone else. It snowballs. It's a self-reinforcing cycle.
And that internet comparison feels right. It really did take decades for it to become what it is now.
It did. From academic networks in the 80s and early 90s through the dot-com boom and bust, it took a long time for broadband, smartphones, and user-friendly apps to make it truly mainstream. Foundational technologies just take time to mature and integrate.
So patience is required with Bitcoin too.
That's Boyapati's perspective. It's likely following a similar S-curve adoption path. Slow at first, then accelerating.
Are we seeing signs of that acceleration now, that market integration?
Well, look at the 2025 example. Indian businesses accepting Bitcoin for online payments.
That feels significant, not just holding it, but actually using it to buy things.
Exactly. That's a crucial step. When you can spend it easily on everyday goods and services, it starts functioning properly as a medium of exchange, not just a store of value or investment.
So merchant adoption is a key indicator.
A very important one. It shows growing confidence and utility. It makes Bitcoin more useful for ordinary people, which draws more people in, which encourages more businesses to accept it.
Yeah.
See the loop.
Yeah, the network effect in action.
And those network effects are incredibly powerful, especially for something like money. The more people use a particular form of money, the more useful it becomes. It's why switching monetary standards is so difficult, but also why if a new standard gains momentum, it can become dominant quite quickly once it reaches a tipping point.
Emergent adoption, like in India, suggests we might be moving towards that tipping point.
It's certainly a strong positive signal. It shows Bitcoin moving beyond speculation and into real economic activity. This practical utility is what Boyapati believes makes the adoption trend robust and sustainable, not just a bubble.
It's about real people finding real value in using it.
Exactly. Driven by convenience, lower costs, maybe dissatisfaction with the old system. It's this organic growth, he argues, that gives Bitcoin its resilience and long-term potential. It takes time, but it builds a solid foundation.
A very compelling picture of how adoption might unfold. But let's be real, it's not all smooth sailing, is it? There are definitely risks, challenges. Boyapati acknowledges those too, right?
Oh, yeah.
You can't talk about Bitcoin without talking about the volatility. It's wild sometimes.
The price swings are definitely not for the faint of heart. Up 10% one day, down 15% the next. It makes it hard to budget or rely on for short-term needs.
Absolutely tests your nerves. And then there's the whole regulation thing. Governments haven't really decided what to do with it yet, have they?
That's the other big uncertainty. Will they try to ban it, tax it heavily, regulate exchanges out of existence? It's a huge question mark hanging over the space.
So Boyapati flags these as the main immediate problems: volatility and regulation.
Yes, those are the key risks he highlights. The price swings make it difficult as a stable store of value day to day, which hinders adoption for payments. And the regulatory uncertainty creates risk for users, investors, and businesses building on Bitcoin.
Different countries are going in totally different directions, too.
Exactly. It's a confusing patchwork quilt of rules globally, which adds complexity.
But Boyapati puts this volatility in context, doesn't he? With the tech stock comparison.
He does. He draws a parallel to the early days of major tech stocks like Amazon or even Apple back in the dot-com era.
They were incredibly volatile, too, right?
Yeah.
Huge swings.
Absolutely massive swings, because nobody really knew how big the internet would be or which companies would win. Investors were basically betting on future potential, and sentiment could shift dramatically.
So Bitcoin's volatility is just growing pains, a new technology finding its footing.
That's his argument. It's typical of emerging disruptive assets where the market is still figuring out the long-term value and adoption curve. It's price discovery in action, messy as it looks.
And the regulatory uncertainty, we see that playing out directly. Like the 2025 example with Indian regulators debating rules.
Right. Every time there's a new announcement, a proposed rule, even just a rumor,
the market reacts,
Yeah.
often negatively, at least temporarily.
Exactly. That debate in India causing market dips. That's a perfect illustration of how regulatory actions, or even just talk, can create short-term headwinds and uncertainty. It makes businesses hesitate, makes individuals nervous.
So how does Boyapati suggest navigating these challenges? Does he think they're permanent roadblocks?
Not permanent, no. His perspective is that these hurdles are significant, but ultimately manageable with time. Meaning that as the technology matures, as adoption grows, as people understand it better, the volatility might decrease. It probably won't ever be zero, but maybe less extreme. And on the regulation front, while it's messy now,
Eventually, some kind of stable framework will emerge.
that seems to be the expectation. Regulators face a huge challenge trying to control a decentralized global network. It doesn't fit neatly into existing boxes, but over time, workable rules tend to develop even if they aren't perfect.
It's happening all over the world, this regulatory debate.
It is a global conversation, and Boyapati would likely point to Bitcoin's resilience, despite all this uncertainty, as evidence of its strength. It keeps running, keeps growing users, keeps processing transactions, regardless of headlines or government crackdowns.
So the core technology and network are robust enough to withstand these pressures.
That's the underlying belief. That the fundamentals, the decentralized nature, the fixed supply, the network effect, are strong enough to overcome these temporary challenges. He sees them as bumps in the road, not the end of the road.
Okay, so challenges acknowledged, but viewed as manageable in the long run. Which brings us to the endgame, Boyapati's ultimate vision for Bitcoin. Right, after laying all that groundwork, the history, the economics, the risks, Boyapati really goes for it at the end, doesn't he? He paints this picture of a truly massive shift.
He absolutely does. It's not just about a better way to send money online. It's a prediction of a fundamental change in the global financial order.
What's the core prediction?
That Bitcoin could potentially replace traditional monetary systems, not just coexist, but actually supersede fiat currencies.
Wow, that's huge.
It is. He sees it as a generational shift, moving power away from centralized institutions, governments, central banks, and back towards individuals.
Up so.
Because if money has a fixed, predictable supply governed by code, not by political decisions, then individuals regain control over the value of their savings. No more hidden tax of inflation, no more arbitrary devaluations based on policy choices. Financial sovereignty, essentially.
A return to sound money, but secured by math instead of gold.
That's a good way to put it. Money whose rules are transparent and can't be easily changed by those in power.
And he emphasizes this would be a long process, right? Not happening next year.
Definitely. He uses the historical comparison again. The shift away from gold-backed money to our current fiat system took decades. It involved major policy changes, economic shifts, societal adjustments.
Like the end of Bretton Woods in the 70s.
Exactly. That wasn't one single event. Boyapati sees Bitcoin's potential rise as a similarly long, complex, but ultimately transformative process playing out over decades. A kind of reglobalization of money, but on a decentralized foundation.
And we're seeing hints of this, maybe. Pioneers testing the waters.
Well, the El Salvador example from 2025 is fascinating in this context. They made Bitcoin legal tender back in 2021.
Which seemed crazy to many people at the time.
It did, but according to this 2025 scenario, they haven't given up. They're apparently expanding its use for everyday things, groceries, bills, transport.
So it's becoming actual money there, not just an investment.
Yeah, that's what the example suggests. It's a real-world test case, warts and all. It shows the practicalities, the challenges, but also the potential of a nation actually adopting Bitcoin at a fundamental level, trying to empower citizens with this alternative.
What are the bigger implications if this vision plays out, if control shifts to individuals?
The societal and economic implications would be profound. It fundamentally changes the relationship between the citizen and the state regarding money. Monetary policy becomes predictable, auditable code, not discretionary decisions made behind closed doors.
Less power for central banks and governments over the economy.
Potentially, yes. More direct control for individuals over their wealth. Freedom from inflation, maybe freedom from certain types of financial censorship or control. It implies a world where economic power is much more diffused.
Driven by technology.
Yes. Boyapati sees decentralized ledger technology as the driving force behind this potential global monetary transformation. It raises huge questions about sovereignty, stability, liberty. What does truly global permissionless money mean for how the world works? It's a future that definitely makes you think. It suggests that the rules of money, which we often take for granted, might be fundamentally rewritten by technology, putting power back in the hands of the individual user. It's a compelling, if ambitious, vision to consider.
Wow. Okay, that was quite a deep dive. We've covered a lot of ground.
It really have.
From, the absolute basics of why money even exists, tracing it back to barter.
To Boyapati's core arguments about Bitcoin's value coming from that verifiable scarcity and growing network trust, much like gold historically.
Right. And that its digital advantages, speed, global reach, transparency, making it potentially better suited for today's world than physical assets.
And contrasting that with the critique of fiat money, specifically that inherent risk of inflation due to unlimited supply potential.
Yeah, the hidden tax idea. And finally, looking at the adoption journey, comparing it to the internet, acknowledging the volatility and regulatory challenges.
But ultimately landing on this bold vision of Bitcoin potentially transforming finance and putting control back into individuals' hands.
It's a powerful case he builds. You don't have to agree with all of it, but it definitely makes you think differently about money.
Absolutely. The key takeaways really stick with you. Scarcity matters. Trust can be built through code. Digital is efficient. Fiat has risks. And adoption, while challenging, follows recognizable patterns for disruptive tech. It challenges a lot of assumptions.
It really does. And it leaves us, and you listening, with a pretty big question to chew on, doesn't it?
Definitely.
If this future Boyapati envisions this tech-driven, decentralized shift that empowers individuals financially, and that really is where things are heading, what does that mean for you? For your own financial independence, the way you save, the way you interact with value? Something to really ponder as we wrap up.